Markets have ended in the red for the sixth consecutive trading day. There is a lot of worry out there about what exactly is happening. I have spent the day speaking to some of the largest and biggest market voices, veterans, to figure out what's ailing Indian markets. Now, broadly, this is the sense I'm getting. After a binge, like a holiday season or something, you tend to go on a diet. This is kind of what we're seeing in the Indian markets. A detox after a period of binge. And most of these healthy cleanses always have a trigger. In this case, the trigger is geopolitics and the US markets primarily. The fact that the US Treasury has crossed the 5% mark means it's hit a psychological barrier, and that is weighing on Indian markets. We're seeing that in the kind of foreign investors selling as well. Then you have other geopolitical concerns, the ongoing Israel-Gaza conflict, etc. So what are top market investors saying? Let me just take you through some of the voices I managed to connect with today, and important voices on such a day. So Manish Chokhani, director of Enam Holdings, says valuation excesses, particularly in mid and small cap stocks, are being corrected in this sell-off. He goes on to say, though, that for all value proposition investors, any kind of dip is a great opportunity to buy. And that is a consistent theme that I have been seeing across all the market experts that I've been talking to today, that it's about finding opportunity at these kind of dips, but also about a clean-up drive. Look at what Nilesh Shah says, and it's a great quote from him. He says, in the last few months, we have seen kachara stocks outperforming quality. Donkeys can outperform horses for a while, but not for long. He, of course, also says that this is a great time for value investors to come into the markets. But what do you now invest in? Well, Nilesh Shah from Envision says this is the time to keep some of your powder dry and choose very carefully and very wisely.